Good morning, good afternoon, good evening, folks. It is Monday, and that means we bring on the man, the legend, Greg Dickerson, to start off our expert series. How you doing, sir?
Doing great, Michael. How are you this morning?
I'm doing well. We'll see if AT&T comes through and keeps my network up for the next hour or so. So we'll
Yeah,
see what happens.
your camera looks much better, so I think your viewers are going to like that.
There you go. So I want to talk to in our first of three discussions about inflation or deflation. And I want to kind of stay out of the headlines, hey, used cars are up or chips are doing this. And I kind of just want to look out at a year or two as an investor, as an entrepreneur like yourself, and kind of figure out, A, do you even think about these two things? If you do, in what lens, and maybe even which one scares you more? So why don't we just start there? What do you think? Inflation, deflation, something you think about? Don't, what you got?
Yeah. From a macro investment standpoint, as somebody who invests in companies, invests in real estate, invests in the markets, I'm watching all of these things because inflation is probably the biggest risk on the table right now with, the recent print and the Fed's upcoming meeting on Wednesday. All eyes are on the Fed.
Yeah.
And we are definitely in an inflationary environment. The question is it really transitory? So what I see as an entrepreneur involved in companies is you can't get any help. It's very difficult to hire labor. Your supply chains are still extremely constrained. So the costs of your goods to produce goods and services are going up. So you have to take those factors into consideration and then ask yourself, well, is this long-term? Because if it is, as a business owner, I need to react. And how do you react? You raise your prices. Now we're seeing that across the board, company after company is coming out saying prices are going up. Also, companies that have suffered are trying to recapture some of those lost profits. So they're going to raise prices and use this inflationary environment and these labor issues and supply chain issues as a basis for increasing their prices. And the public's going to be, okay, we understand.
Yeah.
And as we all know, generally when prices go up, they usually don't retrace. They will stay up as long as they possibly can. Now, the interesting thing is when you think about inflation, it can be good in some areas. So obviously wage inflation is a good thing. We have not seen wages keep pace with housing costs and with the costs of goods and services, fuel, transportation, things like that. So now we're starting to see wages go up a little bit because it's so competitive for employees and talent out there. So I think from that standpoint, inflation can be a good thing. And if this is transitory in nature, then we're going to be okay. But I'm not so sure it is.
Yeah, when I break down inflation, because this is something I think about a lot as somebody who's a real estate investor, frankly, where cost of capital is my biggest expense every year, right?
Mm-hmm.
And I have rent and I have tenants, and these are all things that I'm concerned about. So when I look at inflation, I kind of break it down now into kind of three aspects. There is clearly a shipping issue going on. It's very disruptive. Ports, ships, planes, all of that. So I would say most of that is transitory, right? And I still don't even know what transitory definition is. Is transitory a month? Is it 3 months? I'll call it rest of the year, right? So I think that will work itself out. I think shipping will, as the economy the gears start working again as they did, that will go down. Then there's commodities. Commodities are so disruptive today. Lumber is the biggest example you and I know about in real estate, right? It's already broken. It's already seen the peak. It's down 27%, I think, from the peak last time I checked, but still up hundreds of percents where it were. But again, the trend is now coming down because again, what happens when something breaks like that is people who use it stop. Builders stopped. Builders around me that I've been talking to, you and I had a bankruptcy discussion, right? Are some builders hiding potential bankruptcies in their cash flow statement? Some of the builders reached out to me after that and goes, Michael, you're right. We laid a pad and stopped. We're like, we refuse to play in this environment. So I think some of that comes back. But your point about wage inflation, my biggest takeaway from my econ degree is price elasticity. And the stickiest thing in price elasticity is wages. Once wages go up, historically speaking, they don't come down. And like you said, I think wage inflation is net good for real estate because when you think about affordability, everybody talks about price. I keep telling them, think about payment. But what's that third variable? It's average income. right? That's the math inside the affordability. So if we raise average income 5%, that can help that, that affordability index be a lot more affordable, right?
Yeah, and I think transitory. So I think where the Fed is defining that line is when we emerge from the pandemic, meaning all restrictions are lifted, all of the unemployment benefits and bonuses are terminated, when the forbearance program is over. I think that is when you see the end of the transitory environment, and that line in the sand is drawn. Where moving forward, so that takes us to what, September, when most of those, if not all of those things expire. So by the end of September, going into October, and more specifically by the end of the year, the transitory argument will be over.
Yeah, and I think again, if we go back to those three, right? I think shipping, if that's the case, right? If we put December 31st as the end of the transitory period, I think a lot of that works itself out. I think shipping goods around the world gets easier. I think commodities will work itself out as more and more comes online. And again, the other thing that's really interesting about an economy that I'm thinking about is it was a lot easier to shut it down than it is to restart. Right,
Yeah.
Shutting down the economy proved to be remarkably easy, which I would have never guessed, but was remarkably easy. Getting it started again is a lot harder than I think people realize, and that's what we're seeing, a lot of herky-jerky movements throughout the supply chain and commodities. Is that fair?
Yeah, it has been slow to restart because it has been such a scattered pandemic. I mean, different areas having different infection rates, different issues with restrictions, things like that. So they're, it's very regional. So it's difficult for everything to open up. Then when you go from an international scale, and you're, on your point of transportation and imports, exports, things like that, other countries are still in the thick of it. They're still not over the hurdle. And in fact, a lot of countries are closing down and still having more and more issues with the virus. In this country, we don't know whether we're through it or not. A lot of people aren't getting vaccinated. So there's, a lot of speculation out there that this variant that is predominant in India right now is in the United States and is going to cause a lot of infection. So, I mean, we're not done yet. We're not over the hurdle. We're not through with it. And this isn't the only time something like this can happen. But yeah, it's interesting trying to get things back open. And I think the biggest issue is, again, it's the incentive to keep people from getting back into the workforce, getting back into the economy and producing versus just flat out shutting them down and saying you can't work. I mean, that's easy to do. You can turn the switch off, turning it back on. You got to rev that machine up. You got to pull all the support so that people have the incentive to go back to work and create and produce again versus not.
Yeah. Well, let's end this on the deflation talk. We haven't talked about that yet. I think there's, at least on my channel, I'm seeing some frankly nasty comments that I end up deleting, warning about deflation coming. And, I think there could be some asset deflation, right? I think we've seen, in the last year, don't bet against the Fed. I think the Fed has unnaturally raised assets. It's becoming almost mania-like in lots of different sectors. So I think some of that comes home, right? When the Fed eventually talks about tapering and then stops buying in the bond market and then ultimately raises rate this year or next year, we have a dollar bet on that. It'll be interesting. So I could see some deflation. Again, I'm obviously biased, but I just don't see it, generally speaking, as a huge concern.
Yeah, and it depends on where you're talking about it hitting home. So the markets obviously at some point have to retract. They have to deflate. When that happens, that puts strength back into the dollar. So you can go back and chart historically the action of the dollar. In market sell-offs, the dollar goes up. In commodity sell-offs, when gold's down, the dollar's up. When the market's down, the dollar's up. So deflationary environment's good for the dollar, but it's not necessarily good for the economy. And we're on very dangerous ground right now. We have asset bubbles everywhere because of the $100 billion, $120 billion bond purchase that the Fed's been on every single month in, month out. They're purchasing $120 billion in bonds. That's $1 trillion, $2 a year of liquidity pumped into the market. So where's it going to go? If you are an income-seeking investor, where are you going to go? Where are you going to put your money? There's only one place you can get any yield, and that's in the markets. And until that bond purchase program stops, that's going to continue to run. And we're starting to see the tipping point now, I think, in the markets. And there's a lot of concern. Yeah, there's a lot of concern. And, Paul Tudor Jones came out today on CNBC and said that, the Fed's reputation and credibility is on the line this week. That, I mean, they're running the risk of potentially going down as the worst Fed policy in the history of this country.
I actually saw that interview. One of the things that I noted is Paul Tudor Jones is basically waiting till Wednesday to make call on 80% of his portfolio. And what did he say? He said, if the Fed keeps ignoring higher prices, it's time to go all in on the inflation trade. I'm like, whoo.
Yeah.
That's a billionaire talking right there. So it's going to be, Wednesday's a big day. Part of me thinks that Jerome Powell is going to come out and just be a robot and say transitory, no problem, no problem here. And Paul Tudor Jones is basically like, if he does that, watch out. So Wednesday is going to be interesting. Any closing thoughts on?
We'll see if he actually, we'll see if he actually backs that up. So,
exactly.
Yeah. I mean, inflation's here. It's real. Yeah. We do have a delay now. There's something going on with your internet, but inflation's here. It's real. It's good for some aspects of like wages, things like that, but obviously it's not good for the overall economy. We have to get that in check. The Fed has to back off. They got to pull the foot off the gas. Rates need to recheck so that things can rebalance, which will create some deflation, but that's primarily going to be where we've seen hyperinflation. And yes, we've seen hyperinflation. It's been in the markets. It's been in assets. That has to deflate. That's going to be good. That's going to be healthy. It'll put us back into normal ground, normal territory. And I think we'll be able to move forward from there and have normal, healthy growth if we can get the Fed out of the business of the economy.
Yeah. I think 2022 is going to be a more normal year, but we got to get through the next. Can you believe this year's half over almost? It's crazy how fast this year has gone. So this has been a great conversation on inflation, deflation. We're going to change it up, folks, in episode number 2. And we're going to ask Greg Dickerson what he thinks about Dave Ramsey and his 7 baby steps. I've always wanted to ask him. I bet you it's going to be a very interesting conversation. So thank you very much, Greg. How can people find you?
GregDickerson.com. That's where all my information is. I have a YouTube channel, podcast, and I talk about all things entrepreneurship, real estate, investing, markets, cryptos, everything.
Yeah, folks, and pay attention to episode number 3. We're actually going to ask Greg about Bitcoin. We're going to have an interesting conversation. Yeah. All right, buddy. Thank you very much.